Hey everyone, happy Thursday, June 29th. It's about 10:30 on the West Coast and it's time for another market update. Like I said last week, I'm actually out of state visiting family on vacation this week, but there was a lot of housing data, so I wanted to share that with you guys, get you guys that info. I'm not going to have the graphs, but I at least wanted to get you these numbers because, like I said, a lot happened this week and a lot is happening today. So let's get right into it. First thing we got was April Case Shiller appreciation numbers. So that came in April up 0.5%. But like I warned, we were expecting this to happen in one of these upcoming reports. Year over year turned negative. So we might see a lot in the news about that, negative 0.3% year over year. Keep in mind that that just has to do with how they calculate year over year numbers. We expect that number to go back in the positive over the next couple months and end the year positive. But numbers were so strong last year that those came down a little bit. Next thing we got appreciation-wise was the FHFA report. And remember, FHFA does not count jumbo loans and does not count cash. And as you can see, that was up 0.7% month over month. And year over year, they're showing 3.1%. They're actually showing home prices in that level, are above what they were in the June 2022 peak. So remember, these FHFA are going to tend to be homes on the lower priced end. So lower price homes are going quick. There's a lot of bidding wars. There's a lot of competition there. Where the higher price homes are sitting longer. There's more price reductions, more discounts if someone's paying cash, which is going to show up in the Case Shiller. So that's the main difference between those two. Also, what we got this week was May new home sales, so new builds, up 12.2% for the month, 20% year over year. So new builders are doing awesome right now. So they're killing it. There's not a lot of inventory on the pending home side, existing homes. So new builders are filling that gap and they're doing really well for themselves. Next thing we got, so May pending home sales. So the opposite. So this is going to be a good little snapshot what's going on in real estate right now. May new home sales way up. May pending home sales down negative 2.7%. They were expected to be down 0.5%, but that's a lot weaker than expected. And they're down negative 22.2% year over year. And really what it comes down to, there's nothing for sale existing. People are not selling their homes. Rates are high, things like that. People are sheltering in place. So nothing out there to buy. So there's not going to be as many pending home sales. So new home sales doing great. Existing, pre-existing inventory, pending homes not doing great, mainly because no one's selling their homes and no one is trying to buy a home. Initial job claims came in really weak today. They were expected to be about 266,000. They came at 239,000. We know this is really important because the Fed's paying close attention to this. So, in their mind, they see job claims going down. Job market is still too strong. One thing to keep in mind with these specific week's numbers, there was a federal holiday on Monday, Juneteenth. So there was only 4 days to do, as far as there was only a couple days to do their polls for people to apply for unemployment, one less day. So that probably showed up in the numbers a little bit. But again, the market's reacting really bad to this along with some other news. So not good to see that going down. Not that we want to see everybody lose their jobs like we talked about, but the Fed seems to. Purchase apps were up 3% last week, down negative 21% year over year. That year over year number actually dropped quite a bit, but that's because, again, the strong comparisons are going away and we're getting into when things were already starting to slow down quite a bit for us in the mortgage industry. So miscellaneous, another thing that came out today besides, Fed Chair Powell continuing to talk tough on inflation over in Spain was, the revised final Q1 for 2023 GDP came out. And previously they had that at 1.3% again. Now they're showing it at 2%. So it was revised upward. And that just shows, what they're saying is the economy was a lot stronger in quarter one than they actually expected. That combined with that unemployment claim coming down and Powell's tough talk, it really caused some hurting on bonds today and mortgage rates, along with it. So the average conventional was actually 6.91 yesterday, jumped to 7.04 as of today. Like I said, strong economic data, strong jobs report stuff, all that kind of stuff is kind of playing into the thing we're worried the most about, which will be that Fed meeting on July 26th, where they might raise rates again. They're really telegraphing that they will. Seems like they want to. We want the data to make them not want to. But unfortunately, this data that came out the last couple of days has not gone in our favor. So right now, I think the market's having an 87% chance that the Fed will hike, 13% chance that they won't hike. Tomorrow, we get PCE inflation. PCE is the Fed's favorite form of inflation. Especially the core part. So that number tomorrow, if we're going to get a rally, if we're going to get some positive news, it's going to start there. If that kind of goes along trending with these other numbers, then that's going to just lock in that rate hike even more than it was already locked in. So like I said, don't have the graph for you guys today, but that's all I got. Not a good day today. Everything else been pretty flat throughout the week. Housing, like we talked about, appreciation's hanging in there. Home prices, that's good for homeowners currently. Pending home sales, all that kind of stuff, not good because there's not a lot of inventory out there. And again, builders just killing it. So, we got to see what happens tomorrow's inflation report. Next week, when do my my market update on Thursday, I will make sure to cover that, and I'll have a lot of news to share with you guys. But in the meantime, we got to hope that we get some positive news tomorrow. Fingers crossed. Everybody enjoy your day, and if you need anything else, reach out. Thanks a lot.